market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, oil is holding its recent gains as a final deal to reopen the Strait of Hormuz between Iran and Oman remains elusive. Tehran ruled out direct talks with the U.S., and President Trump says Washington is, quote, semi-negotiating and can wait for Iran's economic suffering to soften its stance. Well, Iran's foreign minister says an agreement with Oman is very close, but negotiations with Washington cannot yet begin.
At present, we are not engaged in any negotiations with the United States. As long as the American violation of the Memorandum of Understanding continues and the U.S. does not make amends for its violations, there is no possibility of resuming negotiations.
Well, for more, we're now joined by our Abir Abu Omar in Dubai. Abir, so talk us through the latest back and forth between Iran and the U.S.
Good morning, Francine. Yeah, it continues, the back and forth between Iran and the U.S. You just heard the Foreign Minister Abbas Araghchi saying that a return to the negotiating table with the United States cannot happen unless the U.S. ends its hostilities. President Trump also over the weekend saying that he will wait for the economic toll to take its weight on Iran, and therefore they will have to go back to the negotiating table. So, again, a lot of back and forth between the two sides. Iran maintains that Washington is not part of those negotiations that are taking place between itself and Oman to restart movement in the Strait of Hormuz. What we understand and what we have reported on over the past week or so, Francine, is that the two are discussing a mechanism of some sort to start or to restart the movement of ships and tankers through the Strait of Hormuz. That remains elusive. Both parties have fallen short of reaching a final draft, and we don't yet have the details for that. Meanwhile, of course, we're monitoring the traffic or the lack thereof in the Strait of Hormuz. We have reported multiple times that ships are hardly making their way through. We've reported over the weekend as well that an ADNOC flagged ship was hit with one person killed and multiple others injured. And so those are the things that we have reported when it comes to the overall agreement. And then within Iran itself, and what perhaps is the most important out of this weekend, is some reshuffling that has happened in the echelons of power. They're reshuffling of some real hard liners. One of them is the new political advisor to the Supreme Leader Mujtaba Khamenei, who has said that in order for Iran to come back to the negotiating table, the U.S. would need to permanently end the war, lift the naval blockade, unfreeze those blocked assets, lift the oil sanctions. And so a lot of concessions that are going to be a hard sell for the United States. A lot of back and forth, a lot of complexities in the region. Yet again, a widening of the parameters of the war. But for now, what we wait for is that final draft between Iran and Oman and some much needed movement in the Strait of Hormuz, Francine.
Abir, thanks so much. Bloomberg's Abir Abu Omar there with the very latest on the Middle East. Now, global stocks continuing to trade near record highs. U.S. jobs data helping to ease concerns about a rate hike by the Fed. Let's bring in our Justina Lee, our markets reporter. Justina, good morning. Happy Monday. Ongoing uncertainty in the Middle East does not appear to have dampened the stock rally.
Yeah, that's right. I mean, if we look at the chart here, the MSCI World Index has hit another record high. And it does feel like investors are generally taking a glass half full approach to the conflict in the Middle East, just as they are with, U.S. economic growth. I feel like there's this sense that maybe we're in this Goldilocks zone where we don't have to worry about a U.S. rate hike just yet. But at the same time, even with the payrolls number that we got last Friday, they're not so worrying that people are worried about U.S. economic momentum. And in fact, today we got the news that JP Morgan has raised their S&P 500 year-end target from 7,000, which of course the index has entirely blown past, to 8,000 on the back of a stronger than expected earnings season. And also what they say is, pretty good monetization of AI by some of the hyperscalers.
Justina, it also seems that we could see a major shift underway for European stocks.
Yeah, that's right. We don't talk about European stocks that much. It's all been about U.S. and Asian lately. But if we kind of look at this chart here, we can see that while the U.S. economic momentum has kind of rolled over a little bit lately, more recently, Europe's economic surprise index has been on the up and up. So you can see pretty strong fundamentals for this part of the world. I mean, in addition to this, earnings growth has also been pretty solid at 17% this recent season. And so we can see hear that. That is why even the Stocks Europe 600 has been hitting those record highs. But of course, an important thing to remember about European stocks is that they tend to be a lot more sensitive to oil prices. So they've probably been supported recently by oil coming down from the peak in July. But if anything kind of happens again in the Middle East that will disrupt that, I think that will be a headwind for European equities again.
Justina, thank you so much for the terrific briefing. Justina Lee with the very latest on stocks and positioning. Now joining us is Jennifer McKeown, Chief Global Economist at Capital Economics. Jennifer, there's a lot to talk about, especially after that report on Friday in the U.S. Does that push back any expectations for interest rate hikes in the U.S., or is it just an imminent interest rate hike that's pushed back?
I think it definitely brings September into more doubt. We have been shifting towards a much greater likelihood of a September hike, but that fall in payrolls does change things a bit. Of course, the unemployment rate came down at the same time, so it wasn't a one-way report. It was a bit mixed, but softer than expected. Wage growth at 3.2% is probably not really strong enough for the Fed to be really pushing for hikes. So an awful lot depends really on the CPI print that's coming out. Of course, we have another payrolls report before the September meeting, so there's still a lot to watch for, but the likelihood has reduced.
Jennifer, how would you describe the American economy right now? Because there's a lot of, the participation rate actually fell quite significantly, and we're not sure why as well. So I don't know whether it's structural forces or what you could, are we producing quality jobs, or people don't want them and then leave the workforce?
Yeah, there's been an awful lot of volatility around younger people, especially in the US, and there are still huge question marks about just what AI is doing to the labour market. But I think fundamentally I would say that the US economy looks solid, looks pretty healthy. The jobless count hasn't been rising. It's not the case that the bottom's falling out of the labour market. And also, of course, we've got the strong AI story still, which, for all the doubts about how long that persists in stock markets, I think there's quite a long way to go in the macro economy for that to continue boosting US investment, which we're already seeing, but more importantly, US productivity growth as well. So I think the outlook is a pretty positive one.
What about the rest of the world?
The rest of the world, it doesn't seem to have been hit too hard by the Iran conflict in macroeconomic terms.
Which is really unexpected, Jennifer, right?
Yeah,
Even
really.
just a couple of months ago, we thought that, I don't know whether it's inventory behavior or China behavior that's really kind of changed the positioning.
Yeah, both of those things. I think there has been some drawdown of inventories, both in China and across the OECD, which has helped matters. Consumers seem to be dipping into their savings a bit in Europe, which is unusual, but I think very much welcome. Justina was just saying that we've had some positive surprises out of Europe recently. It's been a while since that has happened. Retail sales seem to be holding up really quite well. I don't know how long that can continue. So there's a lot hinging on a deal happening, on flows through the Strait of Hormuz resuming, but for now at least the macroeconomy hasn't been hit too hard.
I mean, do you expect a lot of inflationary pressure coming if this lasts for longer? Or is there something in the economy, the way that we read things, that we should be rethinking?
I think we've got some more inflationary pressure to come in the UK, certainly, where the impact of energy prices tends to be relatively lagged. In Europe, we had thought that inflation had peaked, and with the oil price at $83 per barrel-ish, that's obviously a lot lower than it was at the height of the crisis. So it should be the case that the energy effects on inflation start to peter out now. But again, so much depends on a deal coming through and flows resuming.
What's your rate expectation for the Bank of England?
For the Bank of England, we're not expecting any rate hikes. And in fact, given the softness of the UK economy, we think that interest rates could come all the way down to 3% next year, which is really quite different to the market. So we're watching for inflation to ease off in the rest of this year. Core inflation has been pretty sticky in the UK, but the labour market really looks quite soft. So I think that should fundamentally translate into much weaker wage growth going forwards.
And that's, no matter what we get at the budget, because there's also this, we're trying to learn a little bit more about this new Prime Minister and the Chancellor, and 28th of October is the big day.
Yeah, of course. Not no matter what we get, but I think what we will get will be a lot less than has been hinted at, simply because Burnham is restricted by markets. He won't want to be making the same mistakes that Liz Truss made, so he will need to be quite cautious. And I think these pledges, to the extent that they come through, will need to be funded. He'll need to find ways to fund these things. So I think we will see a little bit of a fiscal loosening, but not really enough to boost inflation and to change the picture for the Bank of England.
Jennifer, I mean, your take overall for equities is actually, this all-time high looks on a slightly firmer footing. Yeah. So what happens next?
Yeah, I think probably that the rally has a bit further to run. Okay. I think we have seen a bit of a shift in the extreme concentration in the equity market that we had seen in favour of tech stocks. That has eased off a little bit. It looks a little bit more balanced now. And fundamentally, AI earnings are still improving. AI investment is still picking up a lot. So I think, and AI use is picking up too. It's still at its relatively early stages. So I think we could have a further improvement to come. Our target for year end is 8,250. But that said, the equity market clearly looks very stretched. So I think it's not so much a matter of if a correction happens, but when that comes. And we think it's probably next year. So
when you look at the tech space, I mean, there's also, we forget a lot of the CapEx space, but also the economic growth in the U.S. comes actually from these AI hyperscaler spending. Is there worry that this slows down if the revenues don't match up?
Yes. So what we've seen is that equity markets, as they will tend to, have tried to bring forward the gains. So it's all about earnings expectations at the moment that's driving the S&P. You're not seeing that so much in the macroeconomy. It's a very different picture. We're at the very early stages. AI investment is relatively strong in the US, but not really elsewhere. So I don't think it's the case that the economy, the macroeconomy, looks too hot. If we get a correction in the equity market, which I think is coming, the impact on the macroeconomy depends very much on what's driving that. If it's about increased competition in AI, falling prices, then that hits the AI labs and that will hit equity markets. But it's a good thing for the macroeconomy, and that would mean that diffusion can pick up. I think the really worrying thing would be if there was a fundamental rethink about how AI can transform the economy and a fundamental shift in AI demand, and that's when you would see the macroeconomy hit hard, and I think that's less likely.
But overall, in terms of sectors, I mean, if you look at the exposure for, other sectors to a possible AI earnings like bust, is it the big ones, or is there concern that there's something systemic even in certain parts of the markets?
I mean, it's possible, and there have certainly been concerns about private credit and private lending to AI, but I don't think this looks systemic. There's not huge leverage in the system as a whole. Corporate debt is relatively contained. So I think that we probably are looking at more of a kind of a concentrated correction, hopefully, rather than a broad tightening of financial conditions, something that would be really worrying for the macroeconomy.
Jennifer, I think one of the biggest stories for us over the summer is what's happening in Japan and actually yen. Yeah. I mean, what's your take? I don't know whether it's, because Scott Bessent is also intervening, whether he's worried about treasuries or whether it's just a Japan concern.
I think it probably is largely a Japan concern, but Japan's a very large market and important for overall financial market confidence. At a time of volatility, you don't want these kind of weaker links. Yeah. So it's important to stabilise the system, and yen intervention does seem to be helping. Yeah. But I think it can only go so far. There needs to be a fundamental shift in Japan towards easing any concerns about the fiscal outlook, and reassuring markets that there won't be intervention in the Bank of Japan's independence, and that interest rates will be normalised in Japan.
Jennifer, thank you so much. A terrific briefing. Jennifer McKeown, their Capital Economics Chief Global Economist. Now, coming up, Berkshire Hathaway is buying stocks again. We'll have details next. And this is Bloomberg.
At At the NYSE, we pride ourselves on being the gold standard of listings. The micro caps was not something that was uniquely focused on the New York Stock Exchange. In fact, I don't know that it was that we were the home to many of the companies you've just referenced. It's why we've been so deliberate in continuing to look at our rule set and uphold the rules and listing standards that we have. It's why when you look at the New York Stock Exchange, the median market cap of our companies is 15 times that of our closest competitor. Because from our point of view, it is about providing responsible access to the best, most well-governed companies around the globe.
Are you seeing a change in attitude at all, or appetite in terms of dual listings, in terms of companies wanting to keep their hometown presence while at the same time tapping that US depth that you mentioned? Or do you find that companies just prefer that singular clean listing with the NYSE?
Well, we think the regional markets, particularly those in South Korea, play an incredibly important role, particularly when you look at the customers that they serve as their home base. So we've been really focused on continuing to further the dual listings, the ADR frameworks that have existed in the U.S. for decades, centuries, if you will, in the case of the New York Stock Exchange. And from our perspective, the regional markets play such a critical role from a capital formation standpoint.
So do you expect to see more ADR listings from firms here in Asia? And which markets do you expect to see those coming from?
Yeah, we're really optimistic about the pipeline that is generated out of Asia, out of this region, but also globally, as companies, as part of their capital formation, don't just look to the retail markets. They look at the opportunities that the U.S. capital markets, the deepest, most liquid markets in the world, present from a globalization of the investor base. So we see these opportunities continuing to play out for the remainder of 26, but importantly into 2027 as well.
Well, the NYSE parent company is looking at exploring partnerships with other groups like Polymarket, OKX as well. I understand you've also got an application in for 24/7 trading. Before we let you go, can you give us a quick update on those things?
Yeah, so if you look at extended hours trading, so we're leading the industry in the move towards the traditional markets going 23/5. That will actually happen in December of this year, where the securities markets will bring the regulated framework, the regulated protections that come with that framework, the stability, the resiliency to a 23/5 hours, which that's what that means is global investors will be able to invest in our regulated markets, ones that exist today, with a lot more certainty.
Well, that was Lynn Martin, the president of the NYSE Group, speaking to us exclusively. Now, Berkshire Hathaway has spent about $4.5 billion to buy back its own shares in the second quarter. It also purchased nearly $20 billion of equities. Signs that the chief executive, Greg Abel, is putting more of the firm's cash pile to work. Well, Bloomberg managing editor for finance in Europe, the Middle East and Africa, Tom Metcalf, is here. Tom, a million questions on Berkshire Hathaway. So it's put its cash pile to work. Let's start with the buyback announcement. It's significant. I mean, it's a big amount.
It's definitely a big amount, but then again, we are talking about Berkshire Hathaway, and I was actually talking about this over the weekend, and, their cash pile is still something like $370 billion. So that's the kind of context we probably need to keep all these numbers in mind. But yeah, no, big buyback. Though actually, I think our Bloomberg Intelligence analyst was saying it's a little bit smaller than they thought. And then, yeah, the $20 billion being deployed, that's really interesting, right? Like, kind of, it's always the question, what is Berkshire going to do with its money? We've at least got a sense of what it's done with 20 billion, and kind of under the new CEO, obviously, is there any change there? So perhaps it's that 20 billion with, we understand, 10 billion or so, I think, going to Alphabet, some money going into Tokyo Marine, an insurer, and then the question is, what did the rest of the money end up going in towards? But two sort of, I wouldn't say seismic shifts, but signs of how the company is, adjusting to life under the new CEO.
Yeah, and as you're saying, I mean, we've had years where they were relatively quiet on the deal front. Actually, there were no deals, and suddenly we have a house builder and a tech deal.
Yeah, exactly. Well, and I think that's probably still the question, though, is what is going to be the really big deal that sort of moves them from just holding cash to, and there's no sort of sense yet of that changing. And for me, that's really interesting. It's one of the conversations you have is like, what does that say about, the stock market that, Berkshire Hathaway still hasn't, after however many years now, been able to find that kind of stellar deal. And, probably Buffett's supporters would say, look, it just shows how disciplined they are, and also how, it's a struggle to see that kind of no-brainer purchase in the current stock market.
Tom, thank you so much. Tom Metcalf there with the very latest on Berkshire Hathaway. Of course, earnings season continues in Europe. I feel like we've had earnings season forever, but there's been ongoing disruption in oil and shipping markets, and that's, of course, boosted energy majors and container lines, with Maersk expected to report strong second quarter results on Thursday. Let's get more with Bloomberg's Chloe Melly, who's been on top of all of the earnings. So what's been the highlight from this week?
Yeah, so this is the last very busy week of earnings season. After that, we can probably start to relax. But the big theme this week is renewable energy. So we've got, in terms of the wind power industry, two really big names reporting this week. So we've got Vestas, which makes wind turbines, and Ørsted, which is a wind farm operator. And so both of them should report quite resilient results, although for Ørsted, we do keep in mind the fact that they had a very difficult 2025 with the rights offering last summer. So they're still working on sort of restoring that investor confidence. And then in Germany, we've got RWE and E.ON, so power producers, energy companies as well. And there they are benefiting from this growing demand in electricity from data centers, of course, and then this rising investment in grid infrastructure throughout Europe as well. So there we're also expecting quite strong prints.
What about Maersk?
Yeah, so for Maersk, they already raised their guidance in June, and so that was off the back of those very strong container rates because of the disruption in the Middle East. Of course, that disruption continues, the tensions are still there, and so even though we're starting to see those container rates dip a little bit, we are still, 70% higher than we were a year ago, so they're going to continue to benefit from that. Although if we look kind of towards the rest of the year, that could come under a little bit of pressure.
Chloe, thanks so much for joining us. Chloe Melly there with the last week, the final stretch, and then it's properly August. Mm-hmm. I mean, most people are on holiday in August, but we're still here giving you earnings and looking at what the Fed does. Chloe Melly with the very latest. Now, this is a picture across the board. We're seeing a little bit, of course, pressure here in Europe, certainly compared to what we're seeing in the U.S. In the U.S. in general, I mean, stocks are trading near record highs at the start of this week. Asian shares were actually tracking Wall Street gains after some weak data on Friday. Did seem to curb bets that the Fed would hike interest rates anytime soon. Now, the focus in terms of data in the U.S. now turns to U.S. consumer price data due later this week, and that should hopefully give us a little bit more clues about what the Fed does next. The other couple of things we're watching out for, so of course it's the Strait of Hormuz, Brent crude 83.96, euro dollar 115.64, and then if we look onto elsewhere in Europe, exactly what's happening. They're looking not only at the oil price, which is rising as much as 1.7%, but European markets kind of on tenterhooks, so we're seeing a little bit of pressure, for example, for the CAC 40 and the FTSE down 0.2%. Coming up, why AI is becoming a difficult talking point ahead of the next Xi-Trump summit. That's coming up next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. No deal on Hormuz. Iran rejects talks with the U.S., and an agreement with Oman remains elusive, pushing oil prices higher once again. U.S. CPI dominates the agenda this week after soft jobs data eases expectations for a Fed hike. Plus, Berkshire Hathaway spends $4.5 billion buying back its own shares in the second quarter. European earnings continue this week with Maersk reporting. So OpenAI is pausing internal work on one of its upcoming AI models to implement stricter safeguards after the system proved significantly more capable at cybersecurity tasks than expected. The move follows a series of incidents that have put AI-enabled cyber attacks in the spotlight. Well, joining us now is Jordan Robertson, Bloomberg senior cybersecurity reporter, and Parmi Olsen, Bloomberg opinion columnist. So thank you both for joining us. Jordan, let's start with you. These are breaches, right? And so we see more breaches by some of these AI companies. Are they just going to be more commonplace?
Yeah, the past couple of weeks have been pretty wild. I've covered cybersecurity a long time, and typically the actors are classically bad actors. They are criminals. They are spies. They are, kind of bad people. Now we're talking about companies hacking other companies, and some of the most richly valued AI companies hacking other companies. We only know of these few examples that we've seen. It stands to reason that this is happening a lot more often than we're aware of. But I should make the note that what we've seen so far, these have been hacks. These have been actual hacks of organizations, of people, and things like that. They've not been catastrophically bad hacks. Right. They've been scientifically very interesting hacks. To see these AI models out in the world kind of unshackled and able to do whatever it is that they're able to do, it's been pretty fascinating to watch.
Fascinating if you're an expert and a student, I guess, of hacking. For the rest of us, it could be a little bit terrifying. So what have they taught you?
Yeah, what you see is that, on a technical level, the AI models will do whatever they're told. And if whatever the mission objective is, they will pursue that objective at all costs, kind of sparing no expense. But when these models have interacted with the internet, and that's really what's happened in the last couple of weeks, these models have gotten out into the internet, in some cases through kind of clever engineering, in some cases through mistakes or oversights. But once on the internet, they've done some fascinating things. They've interacted with people in very kind of creative, ingenious ways. And it's one important point to make about these AI models is technically they're able to do a lot on their own, but they're not able to do everything on their own. At some point, many of these models do need interaction with a person in order to do real damage. And that's really where kind of some of the friction comes in. They need to socially engineer people, typically like open source developers, software engineers online, into doing things for them. And that's really what would take these hacks to kind of the next level of, kind of true kind of large-scale damage, if that were to continue.
And Parmi, I guess the million-dollar question is who can actually get a grip on these?
I think it's going to be very hard to get a grip on it, particularly for the companies. First of all, I think Jordan makes a great point about how these models have an objective, and they will try and achieve that objective at all costs, including lying to people, which is what they've done in some of these recent examples, social engineering people. And these systems, from what we've heard in the cybersecurity world, they're not actually that great at hacking. They're not particularly stealthy, but they're great at manipulation and social engineering. And I personally would be more worried about that, about these systems potentially playing the long game on someone, just socially engineering them for like months at a time. And part of the issue is this objective that they have as models and the way they're trained. There's a method called reinforcement learning, where these systems are given a reward in order to get the training and to achieve a certain objective. And some in the field have said, actually, this could be a problem. It's one of the reasons why these models can be quite sycophantic. And it's also why they sometimes might bend the rules. They're trained not to lie to humans. But in these latest examples, they did lie to humans. So they're doing that because they need to reach that objective. And so this question of can they solve it is actually really difficult. They can sandbox these systems as much as they want in testing. But the fundamental issue of training them to be aligned to human values is really difficult, because how do you even define what human values are? And that's one of the things that's really stumping a lot of these developers of AI models.
That's so interesting. Parmi, last week, look, everyone was talking about Google and the fact that, that there's, I guess, a Google AI reboot. I don't know what you want to call it, with people leaving and also Demis getting on a new role. Fundamentally, what does it mean?
I think it means Google is trying to shift the balance of power from London back to Mountain View, California. So last week we heard that Demis Hassabis is stepping down as CEO. He's kind of moving upstairs to become chairman. Fewer people reporting to him. He's going to be focused on his scientific quests of building artificial general intelligence. And at the same time, Jeff Dean is leaving. And to me, it really looked like Google is just trying to consolidate power closer to Sundar Pichai in Mountain View. So Google does incredible work in innovation. They invented the transformer, which is the T in ChatGPT, but OpenAI exploited that technology and commercialized it. Google is this huge bureaucracy. People inside it often complain. There's too many layers of management, a perverse incentive structure for trying to keep products alive and thriving. And I think this is a huge problem that wasn't being fixed under Demis Hassabis. So I think Sundar Pichai bet there needed to be some kind of radical change to streamline the company. They've been falling behind in AI coding, which is the most lucrative avenue that OpenAI and Anthropic are taking now. Google's way behind. So you needed to do something. They couldn't keep the status quo.
And Jordan, going back to some of these, cybersecurity breaches, I mean, is it a problem that everyone has, or are there certain models and companies that are more prone to it because of how it's built?
I mean, this appears to be an issue that most of these large models will face. Like right now, we have a handful of data points from the last couple of weeks of major companies, including Anthropic, OpenAI, Meta, disclosing issues with their AI models, and hacking. But in theory, all of the frontier models, would have versions of this problem, and we have next to no visibility into, for example, what are the Chinese AI makers? What do their tests look like? What does Moonshot's tests look like? What do DeepSeek's tests look like? And so we've only gotten a few data points about what does it look like when these AI models are kind of left unshackled to go explore the internet. And we're very likely to see many, many more of these things. And there's also no good way to measure how many other of these incidents are happening right now on the internet. We have no way to know. The companies also don't have a great way to know, and they're just discovering this now. So I would expect to see a lot more of these. Now, the companies should get better at containing these attacks to some degree, but as Parmi mentioned, the old school way of doing cybersecurity was you throw this dangerous software in a sandbox, it's disconnected from the internet, it will never talk to the internet. The UK AI Security Institute made a pretty persuasive argument in a paper they released last week where they said to truly test these models, you have to connect them to the internet. Now, they should have monitored them more, and they acknowledge that. But that is a pretty convincing argument that you need to see what these models will do once they are allowed to talk to people and interact with people that can help them achieve their objectives. But they've acknowledged they have to monitor that better, because what was happening now is they were looking kind of backwards at it, and they were going after the fact and saying what happened on the internet. They need to know in real time.
Fantastic. Thank you both for joining us. Jordan Robertson, there, Bloomberg senior cybersecurity reporter, and Parmi Olson, Bloomberg opinion columnist. I know we'll talk a lot more about this, so watch out for the next couple of days as we get Parmi and Jordan back together. Now, China is attempting to close the gap in the AI race, with the U.S. tapping its $28 trillion capital markets. In recent months, regulators have fast-tracked IPOs for strategic companies and opened up more avenues to raise money through bond sales. According to data compiled by Bloomberg, Chinese tech firms raised about $217 billion through initial public offerings and bond sales over the past 2 years. Now, in Washington and Beijing, AI competition, of course, has become a key point of tension as Chinese companies seek to catch up with U.S. competitors. And with just under 2 months until President Donald Trump and Chinese President Xi Jinping are due to meet, tech is just one of the cracks spreading throughout the fragile U.S.-China détente. Francesca Ghiretti is director of the Europe-China Initiative at RAND. Francesca, thank you so much for joining us. I mean, I was looking at the numbers, and again, it just seems, incredible. China is tapping this $28 trillion capital market, so they do have quite a lot of money to be able to spend. Where are they first on AI? How far behind are they?
Right. So we saw at the World AI Conference back in July in Shanghai that the Chinese are somewhat catching up, right? Yeah. So with Kimi K3 obviously was the landmark example of this catch-up, the idea that is happening. And we do see that is happening somewhat across the board, across the different benchmarks. Now, obviously, the US still has a major advantage, which is computing and semiconductors production. They're still much more advanced than the Chinese, and that remains the case. One area where they both will begin to struggle in the next 5 to 10 years, depending on who you talk to, is data in order to be able to actually train these models. The big advantage that the Chinese have at this point is that they offer open source models, right? Yeah. So a lot of companies who wouldn't necessarily go and pay for the large amount of money that a lot of Western, specifically US models required, would either go for the open source models or they would go for some of the Chinese models which prices are much lower per tokens comparatively.
But Francesca, give me a sense. I mean, is it 3 months behind? Is it 6 months behind? And for me, 6 months is nothing.
That is an excellent question. It's difficult to answer in a sector where things move relatively quickly. So in 2 months' time, we could have a completely different picture compared to the picture that we have right now at the moment. I think one of the most interesting things that we've heard so far is that the majority of the economy and the majority of the companies do not need the most advanced models, right?
Exactly, and so they can make them cheaper.
Yes, exactly. They can make them cheap. One other thing that is happening in China, and I think is really important, is, however, there is some thinking around, should we be restricting some of the more advanced models that we are now offering openly, sorry. And the other part of the debate is, we've heard, I think last week from DeepSeek, one of the cheapest models, right, that they're considering raising the prices, quote unquote, significantly. DeepSeek is one of the cheapest, so what significantly means is up for debate. But that could also be one of the things that we're going to see in the future, Chinese models becoming more expensive compared to what we see so far.
But would it be as expensive as the US one? I know we're going into the weeds and the details, but you know, when you speak to a lot of banking chief executives, they're saying actually at the moment, and this could change, but they're using a blend of the US, you know, expensive like the Ferraris of AI, and the cheaper Chinese models. Does this blend pose any security risk, and does it change?
So, okay, these are very good questions. In first instance, no, they wouldn't become as expensive as the US alternatives. Price is really the edge that some of these companies have in order to increase market shares, and this is exactly what you've just mentioned. So even if they increase prices, it's very unlikely that they will become as expensive as the American options. Now, here we're talking about the whiteboard, not necessarily the frontier stuff. Again, that frontier stuff can be somewhat regulated from China and from the US as well, we've seen. Now, in terms of using this blend, that makes sense, but in terms of security concerns, it's not as much a matter of whether the model is Chinese or American, and we could have a conversation around, you know, the different security implication. I know you've just had this conversation. It's really that when you talk about open source models, if you want to release a patch of those open source models, you can't really do that because the model is already out there. So every single entity who's adopted that open source model would have to somewhat readjust and find their own patches. Now, here we're talking about the companies who use the open source code rather than those that have some sort of subscriptions for tokens with these companies, right?
Francesca, do you have any doubts about funding? Because actually there's been so much money poured into it. If you look at the race, again, does it make a massive difference at this point?
It does make a difference. It always makes a difference. But so there are a couple of points. The first one is that, according to data, the Americans are still investing more compared to the Chinese into AI. The type of investments are still different, right? A lot of the AI investment are state-driven. We've just heard of some major banks in China becoming part of these investments. But in the US, it's still a lot of private capital that is driving this. So this is sort of the first point that is important. I think the second point, and here is where a lot of the debate will move in the next few months, is in terms of applications, right? It's not just the frontier, it's not just the most advanced models, but it's really China has been moving very quickly into the embodied AI sphere, right? So robotics powered by AI. And a lot of what we're going to see in the future is going to be in that direction. And in that specific application at the moment, China has somewhat of an edge.
Okay, what's your take on the Chinese economy? Because if that's slowing down, again, does it really impact the ability of them to generate some of these new AI models or updates?
No. So the economy is slowing down. So first part of the question, yes, it is.
But it's not touching the AI.
No. When it comes to strategic priority areas, those will not be impacted because of how the Chinese state and the Chinese system works. When we see some strategic areas of the economy, specifically technology, those are areas in which money will keep pouring in. And we've seen that as well most recently at the last meeting. What they announced is basically they're going to double down investments in 6 core sectors and in the AI Plus plan.
Thank you so much for joining us, Francesca Ghiretti, there, Director of the Europe-China Initiative at RAND, to have a good look about this U.S.-China tech and AI race. Coming up, we'll discuss the future of critical minerals with mining entrepreneur Robert Friedland, as a scandium miner he backs secures U.S. financing. That interview is up next, and this is Bloomberg. Welcome back, everyone. Now, shares in Australian scandium miner Sunrise Energy Metals have soared. That's after it secured as much as $400 million in long-term debt financing from the U.S. Department of War. Now, scandium is a rare earth metal that's critical to industries like defense, advanced manufacturing, and AI infrastructure. I'm delighted to be joined by Robert Friedland, chairman of Sunrise Energy Metals, executive chairman of Ivanhoe Electric's board of directors, and chairman and chief executive of IPOs. Robert, thank you so much for joining us. Now, look, when it comes to the commodities market, scandium is more of a niche commodity. The market is tiny, but why is it so important? And actually, I mean, I'm holding some here. It's light as a feather.
Yeah, well, good morning, Francine. So scandium is one of the 17 elements in the periodic table that's classified as a rare earth. And this particular asset is based in Australia. It's big enough to supply all of the Western world's demand for 30 or 40 years. So this is one element that we have in the Western world that no longer has to be produced or sold from China. So it's quite important to Western economies.
I mean, we're seeing a lot of these niche metals, you know, the funding coming from the U.S. administration. Should other countries do more, especially Australia?
Well, the U.S. economy is the biggest in the world. China's catching up. And so it's really great that the U.S. administration under Donald Trump is actually taking this issue seriously. They understand the supply chain. We had a big meeting in Washington, D.C. Last week, and the president was there, the Secretary of State, the Secretary of Commerce, Howard Lutnick, and I think that's the first time that's happened in the mining industry since the days of President Taft, which would be about 1910. So finally, people are waking up to the central importance of the supply chain and all these critical metals you need to run the studio and use your hand phone.
So what's your relationship like with Donald Trump? And because you've been at the White House, you know, quite a few times, what can you tell us about what exactly they want and need?
This transaction went through the Department of War. It used to be called the Department of Defense, and you know they do really intensive due diligence because it's going into the supply chain for national security. But the same element is used for people like Apple Computer or Bloom Energy in fuel cells. There's a plethora of uses for this particular rare earth. The last time the Pentagon bought some from Rio Tinto, it was priced at well over $6 million per ton. So it's an extremely valuable element. You don't need much of it, but you need it. So just 0.5% of it in this aluminum enables you to 3D print it and turns aluminum into a material 4 times stronger than steel. So it's used in satellites, aircraft, and a number of modern technologies.
Robert, I understand that this deposit also has, I think, one of the largest cobalt, right, outside of Congo. So it also contains a lot of nickel. What will you do with those two?
Yeah, it's a strange geological beast. It's been known for a long time. It's the largest resource of cobalt metal in the world that's not in the Congo. The Congo has most of it. It also has platinum and palladium and nickel. And in the future, I think all those other elements will also be developed. But the scandium sits sort of on a fringe. It took about 14 years to get the permits, engineer it, and design it, and develop it. So this company is an overnight success after 14 years of work, which is typical of the miserable mining industry.
You're planning actually to start in 2028. So once then you have the ore, how long does it take to then process and sell?
Well, the mine's under construction already. We've been ordering long lead time items. And the upstream processing is near the little town of Syerston in the Australian outback. But the downstream processing will probably be done in the United States, all the way to scandium metal. A lot of it ends up in your Apple phone. There's over 50 little electronic applications in a modern telephone. This whole studio relies on it in semiconductors. So it's typical of the elements that the average person has no idea that they're so reliant on.
Well, in terms of timeline, so you start production 28, and then you go and process it in the U.S. When are you full? So 20. So what? A couple of months afterwards, or does it take longer?
About the same time. Yeah, there'll be a processing facility. It'd be upstream and downstream, and it's very, very important because Australia and the United States have a strategic partnership for critical metals, and a lot of these metals don't exist in the United States. So America has to look globally to find these critical raw materials in parts of Africa, Kazakhstan, all over the world. People are searching for these metals.
And then you're looking at listing. So you have 3 companies at the moment. Which one do you see where you see the most growth?
Well, this is an Australian public company. It's up about 45-fold in the last 2 years. And we have committed with the United States government to list the company in the United States, and it may actually
fully list it or dual listing?
No, I think both. But I think it may become an American company because Uncle Sam likes these companies to be domiciled in the United States. iPulse, our other technology company, we've got some funding under the Chips and Science Act of 2022 that was passed in the Biden administration. That is a U.S. company, private company, and Ivanhoe Electric is an American New York Stock Exchange listed company building the best new copper mine in the United States.
You like to keep busy, so what happens after this? A new Ivanhoe?
Yeah, well, I'm overworked and underappreciated.
Underappreciated, never.
Traveling
overworked,
all the time.
perhaps.
Yeah. Somebody has to go out into these remote locations and find these metals because the modern economy is really dependent on these critical raw materials. When Steve Jobs made the first Apple I, it only had about 18 elements in the periodic table, but this is an Apple 17, and it's got 74 elements, one of which is scandium. Scandium is used to distinguish the bandwidth so that you can have 6G and 5G wireless. So it's an absolutely critical material, and it's great news that Australia is now supplying a deposit big enough to supply the world economy.
In general, because of the data centers, infrastructure, and the use of AI, how much more of these critical or raw materials will we need?
We filled in one square in the periodic table.
Yeah.
We have about 35 more to go. So we have a lot of work to do.
So is this your new, are you going to, focus on some of the specialists?
Absolutely. We're working with a number of governments trying to solve this problem because the supply chain is being sort of balkanized, if not weaponized. And we lose our national sovereignty unless we have access to these critical materials. So it's a big shout out or kudos to the current administration that they're taking this seriously. The administration under President Trump announced a huge increase in funding for universities that are teaching mining engineering, metallurgy, geology, because without a fleet of geologists, we can't go out and do this. China's producing about 3,000 mining engineers per year, graduates. In the United States, about 150. So we have a huge amount of work to do to green our world economy and also provide the same metals for national defense.
But so do you see some of the big mining companies get into the space a lot more?
Not very much.
Why not?
They're mostly silly iron mining companies. They're like big elephants that trample a lot of grass and make a lot of money mining iron and copper. But these little ones, these hard to find materials, they really haven't been present. It sort of takes Indiana Jones to go out there and find these kinds of metals that we need.
Okay, so if you're Indiana Jones, what critical material do you go for after?
It's not just the rare earths. There are a number of metals like niobium, tantalum, rhenium, scandium, many that you don't know of. You've heard of gold and silver, which are obviously very precious, but actually a lot of these other elements are more precious than gold and silver if you want to have a hand phone, for example.
So are you scouting for mines now?
Of course. We've been doing it for 45 years.
How much cash do you have to put in new mines?
This is a fantastically high-risk, high-reward basis. This particular deposit, Sunrise, I've worked with Sam Riegel, our CEO, for 14 years. Yeah. And in Australia, in order to mine this kind of thing, you have to make an agreement with the local Aboriginals who've been there 50,000 years. And that can take a decade, sitting down and playing the didgeridoo and getting to know each other and develop trust. So mining is a miserable business. It's not for intelligent people. Somebody has to go out and do this, or you won't have this modern studio.
But you have great fun doing it.
We love it, yeah. We love it, yeah.
Robert, thank you so much for joining us. Robert Friedland, chairman of Sunrise Energy Metals. Up next, we'll have Bloomberg Brief. Look, there's quite a lot of that was a great conversation with Robert Friedland. We'll continue the theme on AI. The other thing we're watching out for is, of course, that data in the U.S. that we saw on Friday, really putting a little bit of a dampener when it comes to interest rate hikes in the U.S. We're seeing a surge in stocks holding near record highs, and also oil ticking higher because there's no end in sight with the negotiation between Iran, Oman, and the U.S. This is Bloomberg.